This is the Iron Trader. It's the 19th, a Sunday. Now, the futures market opened up here at 6 o'clock. So what I'm going to do is there are going to be three videos here. First is going to be crude oil, natural gas, and gasoline. This will get you started for first thing Monday. At the end of the video, the support and resistance levels will be posted. This video is for information purposes only, not a recommendation to buy, sell any stock, commodity, or ETF. Please like and subscribe, and thanks for watching. Okay, first of all, here what we have is we have crude oil. We have your basic daily chart, your weekly, and a monthly chart. Okay, now on Friday, the candle we put in actually a lower low, all the way down to 65.38. Okay, now the really key support is going to be that, and it's also going to be this 200-day SMA on the weekly sitting here at 66.24. Then if that's lost, then we want to go over here to this 50-day on the monthly chart. That's 65.24. If that's lost, then we go to the 100-day, which is sitting at 58.89. Okay, so those are your key support levels. As long as they hold, a crude will be okay. But it's still in it's in a downtrend, it's in a trading range. Now, if this goes back up price-wise, we want to look at this candle, we want to look at this candle, and then we start getting into these SMAs, which are simple moving averages. You want to go look at your 8-day, your 21-day, your 50-day. And then if that can go, then we want to look at this 8-day and your 21 SMA. These are all very key. What we're looking here for on the bottoms, to make a bottom, we're looking for a higher low, a red dog, something that tells you the selling is done. But in the meantime, it's a good scalping opportunity to be going here between this level and this level. Okay, so it's a very good scalp. Now for scalping, I use ETFs. I use UCO for the long and SEO for the crude oil short. Okay. Now, when we look at oil, it just got hammered here along with the markets. But just remember, the U.S. has to buy back 190 million barrels and put it back into the SPR, okay? Plus you have summer driving season, and people are going to be going out, they're going to be vacationing, they're going to be driving. So let's not just get too bearish, just watch the support and resistance levels here. Okay, number two here is we have the same thing again. We have a daily, a weekly, and a monthly chart here on the natural gas. Okay, so if we look at natural gas here, for maybe 2 weeks plus, it's just sideways action. But if you look at the big picture here, you could claim this as a inverse head and shoulders pattern. Right there is your left shoulder, your head, and then your right shoulder. Now, as long as it can stay sideways here, then you have a good chance at this going up. Now, when you look at natural gas, you're sitting at, basically 2.36. That's very, very low as far as the overall natural gas. Now, a lot of people think, oh, all your natural gas is used in the winter for heating it. But actually, it goes into the power plants in the summer. So if you have a very hot summer, it's going to eat up a lot of natural gas here. Okay, so don't get too bearish. The key is watch this channel. This channel right here, okay, it's 1.967 on the bottom and 3.027 on the top. Right now, you're holding in this channel, okay? So what you want to do is look at this. This is the 8 SMA here on the weekly chart. Okay, you need to close above that. And then you have these SMAs here, the 8-day, the 21, and then the 50-day, and then the retest is going to be that 3.027. So this is basically just sideways action here until it's going to break up either below here or it's going to break out to the top. Now, the way I trade natural gas is with BOIL, B-O-I-L. It's a 2-times leverage fund for the long, and K-O-L-D, that is for the short. Okay, so every day after the pit closes at 2:30, I go over crude and natural gas. So stop on by. I'll have all the levels for you on the upside and on the downside. All right, here is gasoline. Now, this is a good way to trade gasoline. It's UGA, it's the ETF. Now you have to be careful with this because as you can see, it doesn't do a whole lot of volume. Okay. So you don't want to go in there with, 10, 20,000 share kind of stuff there. You want to keep this tight, 1,000 to maybe 3,000 shares. Now, summer driving is coming along here. Okay, so gasoline demand is going to start going higher. Now, if you look here on the weekly, you got a good trading channel here. Again, you see the sideways action here. As long as you can hold this bottom level here, okay, and that top level there, then what you do is we have to wait to see which way it's actually going to break. Now, when this came down, when gasoline came down, you put it on the bottom. Now it's been trying to go up. Now we have to look here at this candle here, which is 56.14. And then we look at this, that'd be the gap. And then this here would be the fill at 56.69. Then we can go to the next level, which is the 8-day, the 21-day, and then the 50-day, and then all the way up to 200-day. And then the retest is going to be that 62.42. So right now you've got a good trading range here. We just have to wait and see if it's where it's going to break. But right now you're holding these, these key support levels. You always want to look at these SMAs, simple moving averages. I just keep it simple with an 8, a 21, a 50, a 100, and a 200-day SMAs on all time frames. If you're going to scalp trade, use a tick chart, a 1 and a 5-minute chart, okay? Something a little longer in a swing trader, you can use a 1 hour and a 4-hour chart. But you always want to look at a daily, a weekly, and a monthly. This gives you a good overall picture of where it has been and where it's going to go. Thank you for watching.